Welcome to the DSMR. This briefing highlights where the smart money is flowing as of this video date. As a quick primer, when smart money is distributing, retail investors are buying and institutions are exiting positions. And when smart money is accumulating, retail investors are selling and institutions are building positions. This data, including charts, graphs, and the ability to create bottoming signals, are available to you on bottomfinders.com. Head over there after the video to create a free profile. And with that, let's start the daily briefing. In communication services sector, smart money is in a markdown phase within the entertainment industry, where institutional forces are pushing prices downward into a discount zone to generate supply and steal retail investors away from the market. In the discretionary sector, is facing a widespread institutional downward pressure with distributors, diversified consumer services, hotels, restaurants and leisure, and textile, apparel, and luxury goods all locked in a markdown phase as smart money drives prices lower towards a discount zone to cultivate supply. Bucking this trend is household durables, where institutional players have entered a firm accumulation phase, actively buying from supply, exiting retail investors. Defensive positioning are seeing a notable institutional split in staples, with smart money fully entering an accumulation phase within the food products and personal care products to absorb supply from exiting retail positions. Conversely, beverage remains trapped in a markdown phase, with institutional capital continuing to push prices downward towards a discount zone. In the energy sector, smart money is firmly in a markup phase for oil, gas, and consumable fuels, aggressively driving prices upward into a profitable zone to generate demand and attract retail investors through rising price action. Mixed rotation defined the financials sector as smart money has rotated into an accumulation phase for financial services and mortgage real estate investment trusts, locking up shares from selling retail participants. On the other side of the ledger, banks and consumer finance are navigating a markdown phase, with institutional forces depressing value towards a discount zone. In healthcare, institutional investors are focused on value acquisition, with smart money officially entering an accumulation phase within healthcare equipment and supplies to steadily buy up supply from exiting retail participants. The industrial sector is experiencing a highly fragmented asset rotation as smart money pushes aerospace and defensive alongside air freight and logistics into a markup phase to drive prices higher and attract retail investors. Meanwhile, building products, commercial services and supplies, and ground transportation are all undergoing a markdown phase, with institutions steering prices lower into a discount zone. The technology sector is seeing a uniform institutional push, with smart money operating in active markup phase across communication equipment, IT services, semiconductors, software, technology, hardware, storage, and peripherals, intentionally lifting prices towards a profitable zone to attract retail buyers. Diverging strategies are playing out in materials, where smart money is holding metals and mining in a markup phase to push prices higher to generate demand. In contrast, paper and forest products are shifting entirely into an accumulation phase, with institutions quietly stepping in to buy supply from exiting retail investors. Real estate is moving at two distinct speeds, with smart money driving a markup phase across hotel and resort REITs, industrial REITs, retail REITs to lift values and stoke retail demand. Simultaneously, healthcare REITs and real estate management and development are bound to a markdown phase, where prices are being pushed lower towards a discount territory. Defensive utilities are drawing a selective institutional interest, with smart money entering a solid accumulation phase within water utilities to buy up available supply from retail exits. Concurrently, electric utilities and multi-utilities are being managed through a markdown phase, with prices moving downward towards a targeted discount zone. In closing remarks, the goal should be to invest or move with smart money and not against it. And our goal to show you where the smart money is. An idea bottom for going long is when the smart money has exhausted accumulation, and those are the dark green lines. Those are the bottoms we look for at Bottom Finders. We will include the text in the video description. If you find this report helpful, show us some love by clicking like and subscribe, and we'll see you at the next one.